Hey, Bitcoin and altcoin traders, new all-time high here. Merry Christmas out there. Something nice to wake up to from Santa. Let's check out where we stand on the charts. Hey everyone, checking in on Bitcoin and some of the altcoins. I'm going to do an altcoin request video for members tomorrow. There's some background noise. Sweetie Pants has a Christmas bone, so we'll have to let her have that for now. And let's check in on things. So we have the dollar, and I'm definitely going to be paying close attention to the dollar first thing this coming week because it is sideways right now. And with the bull break, that 91.24 level would come into play. And with the bear break, obviously, asset bulls would stay in complete control. So short term, we're either going to test resistance or head back down towards that support. And that's going to be a very different shape to the start of 2020, depending on which we get. If the inside bars break bullish, a weekly bounce will likely be underway. We will definitely be watching for a weekly lower high. But again, during that weekly bounce, it could lead to some consolidation in our assets, which have been very strong. Also want to point out GBTC. A lot of people look for clues at times in GBTC, which is one way that stocks and IRAs have exposure to cryptocurrency, or I should say to Bitcoin. And they were very weak on Friday. It was notable. And you can compare. The premium of GBTC will fluctuate based on supply and demand. When there's a bunch of demand, that premium goes way up. And when there's a race to the exit, that premium drops significantly. And Friday was an example, and it wasn't Friday. It was the half-day Thursday. It was an example where there was a race to the exit. And it was essentially risk off from traders and investors. Look at the volume. It was a half trading day. So for the volume to be higher than the previous 2 days stands out. And it also dropped to a price point where we were at the low of December 17th. And at that point in time, when we were at the low of the day, Bitcoin was trading at about 23.6 or so. And if we looked back here, GBTC was hitting the same levels from when Bitcoin was trading in the 22,000 range, 22,800 or so. So that premium eroded where we were at the same price, but the price of Bitcoin was still $600-800 higher than the last time GBTC was at that price. So for me, all that says is people did not want to be holding GBTC for extra days. If you're holding GBTC, your hands are now tied for 3.5 days, where if you're holding Bitcoin, your hands are never tied. You can exit 24/7. So that's a very distinct difference in how to approach trading the space. And in my opinion, it was just showing us risk off because of those extra holiday days, I should say. So Bitcoin, new all-time high. Congrats to the bulls. Daily bull flag confirmed. We knew it was a daily bull flag setup, which is why we were looking to be aggressive on this consolidation, playing off of that support. And I must admit, going back here, and let's just update from our last video. So last video, I was talking about how I was all in and being very aggressive, and I went all in on this pullback. I already had a half position, and I doubled it up on this pullback with 5-minute oversold conditions, and they were pretty beat up. We then saw a big enough bounce where I said, okay, my initial stop was down here on that 21.9 daily higher low. Because we saw a significant bull move back to resistance, if we were to break that low of 22,800, it would be a red flag to me. So I moved up my stop loss from 21.9 up to under 22.8, and it was actually 22,699 to be exact. And that's where I put a stop on the half position. Again, anything that I had added above 20,000, that's where my stop was for it. And I must admit, I pulled my stop, which is not something I normally do, but I was sitting here, and I'm very fortunate that I was sitting at the computer watching this unfold, and it was all the way back here on the 5-minute time frame. So essentially what played out was a huge dump. And if I were not at the computer, I would have stopped out literally at the bottom, and I would have come back very salty that that took place. I was at the computer. I was watching the dump take place. The 5-minute RSI was down in the teens. The 2-minute RSI was approaching single digits. And I said to myself, I am not letting myself stop out at those RSI levels, because essentially what my mindset was saying is buy this dip, buy this dip. I love oversold bounces. That was a drop to be buying because of RSI levels and because we were still holding the daily uptrend. I couldn't buy because I was all in. I had no cash. I don't like that feeling, and I adjusted for that. We'll talk about that in a second. But essentially, my mindset was saying I would be buying right now. I'm not going to let my stop loss trigger at a point where I would normally be adding to my position. So I pulled my stop loss from 22,699 and I reverted back to the previous game plan. And what made me comfortable doing that is I'm not just pulling my stop loss and then at mercy. I just reverted back. I said, okay, my original game plan, 21,900 stop. I know the risk. My risk was 7.5% of my 2020 crypto profits. And I moved my stop up and greatly reduced that risk. But as soon as I saw it playing out. If I'm going to get stopped out here, it's likely going to be right around the bottom. So I pulled that stop, moved it back to the original game plan under 21.9, and then as soon as we saw this significant $800 bounce, I then put that stop back under 22.6. So I did definitely sway from my game plan, but I've done a little bit of back and forth swaying. And again, it's just me staying aggressive. And one other point to make note of is, again, when I say all in, I'm not saying that all of my assets and all of my capital is in play. I have cash that is set aside for the cryptocurrency sector. My stock trading account is a lot larger than that. It's 4 or 5 times that size. So I've had a really good year in 2020 trading stocks. If my all-in Bitcoin position goes to 0, I'm still green on the year because of that stock account. So that's something that psychologically makes me a little bit more aggressive trading this blue sky breakout market. I will happily give back some profit, whether it's 10% of crypto gains, 20% of crypto gains of 2020, to give myself the possibility of more gains in this blue sky space. So fortunately, after hitting that bottom, the bulls were able to recover. And I'll show you here on the hourly time frame just a tiny little detail that made me go from skeptical of bulls, because again, as soon as we got down to that level, I then started to get a bit skeptical of bulls, and it changed right here. Why did it change right here? It's because volume. So look at the volume spikes in the hourly time frame. And again, this is just Coinbase, but the spikes were at tops. All-time high top out, all-time high top out. There's a little all-time high top out. And then the market shift into daily consolidation mode. And then the volume spikes, instead of being temporary tops, they started marking temporary bottoms. 21.9 was a volume spike. This drop here at 22.8 was a little spike. 22.6 had a spike. And look at this volume. It's out of place. You got this volume bar, and look at the previous similar volume bars and the size of their candles. This candle range was $700, $800. This candle range was $650. And then you get this candle with more volume, and its range was 200 and change. So what that showed me was loading, and it showed me bulls defending this hourly higher low. And that was the first time I regained some confidence in the bulls because of that volume. And I started looking at other exchanges. Where is this volume showing up elsewhere? I'm on one monitor here. I got to make sure I'm recording. Many times I'll record a 20-minute video and not press the button. But I looked at the other exchanges. It was Coinbase, it was Gemini, and it was, I believe, Bitstamp perhaps. And the exchanges where it was not showing up, Bitfinex, I don't believe Binance had it showing up. And I made that note in the chat room, and someone pointed out, well, if we're talking US institutional money, they're most likely to be on Coinbase or Gemini. So the more likely exchanges with institutional money had this volume spike defending hourly support, and the names that were less likely, no volume spike showed up. So it was notable enough to me just to make me a bit more comfortable. And then we got a new all-time high today on Christmas Day. So a nice little Christmas present. It's not convincing yet. We only got an all-time high by 1%. Little over 1%, but what, 1.2%? That's not convincing. And again, whenever we get bull breaks with a lack of follow through, we have to be cautious of rising wedges. But we have this scenario that we've seen many times in this bull market where the bears only move, so to speak, is to market sell in one fast hard drop, trigger some stop losses, and then to ensure that the bulls keep control, that low of the flash dump must hold. So if we want to go in and look at this on the 15-second time frame, It's going to take me a while to find it. Here it is. So 15-second time frame, we can see this was literally 1 minute of bear action. 4 candles where the volume stood out as significant. And it was a market sell. And you know that it's a market sell triggering stop loss orders that also then market sell. It was a fast, hard drop. As soon as we see that happen, and as soon as we see a temporary bounce taking place, and it happened again from first 5-minute oversold conditions from an all-time high, we then say that low must hold. So as soon as this bounce started to get going, in the chat room, I was posting how 23.8 is now a very key level, because if you roll over and confirm a lower low, that shows you sustained selling pressure and a lack. If we're all just looking at supply and demand, that shows us that supply is supply is outweighing demand by coins hitting the market that are driving us to lower lows. So I don't fear these flash candles if I'm a bull. What I fear is follow through after the flash candles. So what we saw take place from that flash candle, where we were then able to say, if 23.8 breaks from here, it is a red flag on the day. Absolutely. All-time high by 1.2% into a multiple percent pullback would be a big red flag. But we formed a 5-minute high or low. We confirmed a 5-minute trend change. We kept a 5-minute uptrend. And now it's just your slow grind back up, which again has happened many, many times in the last couple of months, where you're coming up to a resistance level, a market sell flash dumps, and then you just grind it back up. So I'm a lot more comfortable now that we got the grinding action and no bear follow through. Hourly equilibrium, I would not be surprised to see that play out for the next 6+ hours at all. So we've got our high and our low. And now we're watching for the potential of a lower high compared to 24.66. That would not surprise me if that is the case. Then we look for a higher low compared to 23.8. Best case is for the bulls to maintain this hourly 12 period. If we pull back and establish that higher low, keeping the hourly 12 period, the bulls are going to keep full control in the short term. If we're looking midterm, it's the 12-hour time frame. After grinding the EMA 12 support during this consolidation, it gave us a little bit of an equilibrium that eventually broke bullish. This is my midterm guide. If we keep holding the 12-hour EMA 12, bulls are keeping their control. We want to see more follow through. We want to see a move to 12,000 from here. No, we don't. 25,000 from here. So there's a resistance line to keep an eye on as well that's right around 25,000. And depending on where you draw a resistance line from, if I'm looking at the 12-hour time frame and I put this resistance line up, I can see we haven't really gotten over this resistance line on this run up. And look where this top is right here, just about at 25,000. So I don't expect any kind of surge up. We're grinding up right now. And there's nothing wrong with that. It's definitely more comfortable when we're surging up. But in this kind of market environment, we're also not worried about a blow off top where we see a $2,000 candle up and then a $2,000 candle down and a huge amount of volatility. Right now, we're just trying to grind up the hourly EMA 12, grind up the 12-hour EMA 12, and just keep putting in all-time highs and creating more and more space on this daily uptrend. Because right now, from where we stand at 24,400, we have a lot of space where we can pull back and still maintain the daily uptrend. And the daily uptrend is very important to me because there's a lot of space for weekly consolidation. And once weekly consolidation gets going, it's going to be a notable shift in the market environment once that happens. So we could pull back 10% from here and still be in a daily uptrend. And again, the more cushion the bulls can create above this daily support level, then the more comfortable we are. So at this point, I did exit a little bit of my position after I pulled my stop and we recovered from that. I sold a little bit because I said to myself, okay, I don't like that at all, being all in with no cash, because again, that's a dip that I want to buy. I want to have some kind of flexibility to position myself. So I did sell about 20% of my all-in positioning in Bitcoin, and I'm keeping that 80% right now until I see red flags. And I did put a stop loss. As soon as I saw that move to 23.8, I moved a partial position stop loss under that level because, again, it would have been a red flag to me if that level had broken. So as far as my position that is still remaining from 10,700 and that entry back here, the daily uptrend is my guide, and 21.9 is now the most important level. But there's another portion of the position that I did enter on this consolidation that I'm walking up stop losses a bit tighter on to ensure that I am locking in some profit if we do see a shift in the market environment. But for now, bulls are keeping that control. 23.8 is a key short-term level, and we'll be watching the hourly EMA 12 into tomorrow. BTC Dominance, 4-hour higher low trying to form here, and it already did actually. And we could be looking at a 4-hour equilibrium. It's a wide range, 75, 75, and the low is down at 68, 78. So I'm watching for a 4-hour lower high compared to 75, 75, and then probably if we get a little bit more follow through, we'll then watch for a higher low compared to 68, 78. It's a strong daily uptrend still. Again, I personally am not interested in altcoins as long as we're in this environment. I understand if you do a lot of fundamental research and you're really confident about coins, that this weakness you're looking to buy, and that's fine. It's worked out plenty of times in the past for crypto. It's just not my trading style. I want to be where the strength is, and I'm not a fundamental researcher, so I don't care what the altcoin space is doing as long as the Bitcoin dominance chart is in a daily uptrend. And it's worth watching. We are in a 6-month bull flag right now. We're 73.02 breaks. It'll be the highest Bitcoin dominance that we've seen in over 3 years, which is very significant. And again, it's being dominated by the headlines. Hedge funds right now, the hedge funds and the billionaires that are getting the headlines and fueling this current all-time high run, they don't care about altcoins. They're not saying a peep about any other projects because they don't care. They are looking for a life raft of where to put US dollars when US dollars are weak. So that is all they care about right now. And a lot of people like to talk about alt season and alt runs. In my opinion, we've got to see the altcoin space. If we're going to see the amount of FOMO that Bitcoin is seeing right now in terms of the major players and mainstream media, in my opinion, you need an altcoin project that's going to go mainstream and get attention and then see another wave of everybody rushing to find the next altcoin big winner. So I am not bullish on the altcoin space right now. And there's going to be bounces on the way down. Absolutely, there always are. And there's going to be trading opportunity on those bounces. But again, it's bigger picture, daily uptrend on the dominance chart and the dominance of Bitcoin in the headlines versus altcoins that are keeping me completely focused on Bitcoin until that changes. So ETHUSD, anything under 677 is just a daily lower high. And we saw a rising wedge that I've been keeping an eye on and talked about in a couple recent videos. And that rising wedge did break bearish. As we did see, it wasn't a rising wedge, you're right, and it actually didn't break bearish. Revert that. It was a channel, and we held it beautifully. So this channel is still worth watching. Again, it's obviously much weaker than Bitcoin right now, but we are very respective. Let's try that again. We are respecting these support and resistance lines of this channel significantly for the last 2 months. Nope, just 1 month, but still significant. So let's keep an eye on those. We're almost back to the middle of that range. But what I would anticipate right now on this daily time frame for ETHUSD is a daily equilibrium. It's a significant bounce off the low, absolutely. And again, there's opportunity there. But we're now looking for a daily lower high compared to 677.05. Then we'll look for a daily higher low compared to 551.45. And the bulls have a lot of proving to do on this ETHBTC chart. Let's go big picture. ETHBTC right now is consolidating for 4 months, which means money has been better served in Bitcoin versus ETH any time in the last 4 months compared to where we are right now. So that is extremely notable. The weekly time frame is in a clear downtrend. We are in a weekly, daily, and 4-hour downtrend. Next time we bounce on the weekly, we're just looking for a weekly lower high. Next time we bounce on the daily, we're just looking for a daily lower high. And next time we bounce on the 4-hour, we already set it. Our 4-hour lower high is set now 2612. The bulls have to hold the bottom and break 2612 to change the 4-hour trend. Then we would zoom out and look for the daily lower high. My point is, there's a lot of work to be done on a lot of time frames for ETH to gain the respect of where we put our money. For ETH to gain ground on Bitcoin, a lot of time frames have to change their trends. So I'm going to patiently wait for that. Again, we do see short squeezes. This was a ETHBTC short squeeze that had a lot of opportunity in a short amount of time. In a 4-day span, there was a lot of opportunity, but there was no follow through for the bulls. Short squeezes with no follow through, they're great for short-term trades, but they're not great for trends. LTCUSD, daily higher low set at 95.28 and 124.40 is our recent high. high that is being tested right now. And we actually just broke it, but it's still a double top at this point without any notable follow through. But it's a higher high. And we look back at ETH. ETH is nowhere near 677. So that's a distinct difference between the two. And you see it in the LTCBTC chart. Right now, LTCBTC is approaching the highest levels that have been hit in 3 months, whereas ETHBTC is at its lowest levels in 4 or 5 months. It's a very distinct difference. Keeping a close eye, because if LTCBTC gives us a daily lower high compared to 522, there's an equilibrium setup here, and we'll then look for the higher low compared to 417 if we were to reject from here and lose the 4-hour uptrend. XRP getting a lot of attention, headline risk, and right now there is opportunity in both directions. Again, do not try and play XRP USD bounces unless you are an experienced trader that have proven to yourself that you know how to play oversold bounces. And there's a lot of traders in the Chart Guys chat room that are doing that, and they're making money on this bounce. But there are also a lot of people trying to play this bounce that don't have that experience that are losing money. So just be extremely cautious and just know that at any point in time, right now I'm watching for Coinbase, because in my opinion, Coinbase is pretty much the teacher's pet of the US government. And if the US government is pointing at XRP and saying you're doing something wrong, in my opinion, it's a very high risk of Coinbase to delist. And that may be a climax temporary bottom kind of headline. Well, if Coinbase delists, and we've already had 3 other exchanges delist, who's left to delist at that point? So that's something to keep an eye out. But if I'm in a bullish position playing this bounce, I am cautious and concerned and utilizing stop losses because I am just expecting that Coinbase headline at any moment. And that's the way to be protective. We just had a significant bounce of almost 100%. We'll call it an 80% bounce, 90%. And then we saw that FUD strike back again when another exchange, I forget who it was, but another exchange moved to delist XRP. Again, another great bounce, 28 up to 34. That is a 20% bounce. We're now watching for an hourly higher low to form in this consolidation. My only advice would be quick bullish. In the ideal environment, let's say I want a long-term XRP position and maybe I think this FUD's going to all blow over and they're going to pay a fine and that's going to be that. Great, that's fine to have that opinion, but position yourself to have low risk and low stress. Let's say I played this bounce and I got in at 29 cents, a penny below the bottom, and then we see a big bounce and I sell at 33 cents. I sell half. That now drops the break even of the half position that I have down to 26, and it makes me much more comfortable. So that's how I would be doing it, at least locking in partial profit to drop your break even, where if you are looking longer term, you're at least doing so, positioning yourself to not have very high risk if we were to see a move back to the low 20s. Bigger picture, daily inside bars, if they break bullish, we scout a daily lower high. And I like the 12-hour for clarity as well. Low, high of the bounce has been set at 39 cents, and now we're looking for a 12-hour higher low compared to 2135. And one more to look at here, ETHUSD. This one stands out because there are not many coins outperforming Bitcoin right now, as the BTC Dominance chart shows us. But ETHUSD keeps hitting all-time highs, and we essentially haven't had any real daily consolidation since 86 cents, which was over 50% ago. So we can be watching for first 5-minute oversold conditions to be looking for an hourly higher low. We just had, look at these 5-minute bounces, 124 to 130, solid little 3%, 4% bounce, 122 to 127, little 4% bounce. So 5-minute RSI is being bought, and we can be watching for first hourly oversold conditions as well. In the short term, 4-hour potential bull flag, 122 is the most important, 4-hour support level. And we know that if we lose that level, there's plenty of space for a daily higher low. But again, what stands out about Theta the most is that it is going up the last 4 days against BTC, and you're not going to find many altcoins that have a BTC pairing chart this bullish over the last 4 days. Weekly time frame, we are just looking for a weekly lower high. Do not lose sight of that bigger picture, but there's a lot of space as to where that lower high could form. And again, correlation. We have the Theta BTC and ETHUSD correlation showing us ideal scenario for the bulls. It's a 4-hour potential bull flag on both. Watch for the break in that correlation. If the Theta BTC chart starts dropping, even if the USD is trading sideways, that would be a start of a red flag. For the bulls to keep this very bullish scenario that they are in, this correlation between the BTC and US dollar pairing needs to remain intact. So that is where we stand overall. Keeping an eye out for the Bitcoin hourly lower high and tightening range. Overall, the bulls are keeping their control. 23.8 is a key short-term level. And again, we want another move up towards 25,000 and ideally beyond to eliminate short-term rising wedge concerns. 4-hour time frame, if I were going to draw a rising wedge on this chart, look at all those resistance rejections. And as far as support, it would be something along those lines. So thanks for tuning in. Likes and shares and all that good stuff. Comments are appreciated. Hope you have a Merry Christmas out there. Enjoy your time. Be grateful for whatever you can find a reason to be grateful for. And we'll be here forever.
Now, a lot of people have confused it for gold. They think it's digital gold. As I've said, it's just simply fool's gold. I mean, it's not going to 12,000. I mean, it briefly got up to 14,000 earlier this year. As we're recording, it's barely holding on to 7,000. So I just think that we're in a bear market. Bitcoin topped out about 2 years ago, in fact, a little over 2 years ago. So the price of Bitcoin has been falling for the past 2 years, and I expect that to continue.
Suppose you could make a lot of money trading freshly harvested baby brains. Would you do it, or would you say that's immoral? You wouldn't trade them, would you? It's too awful a concept. Well, to me, Bitcoin is almost as bad.
Bitcoin is a bubble, okay? Bitcoin is a bubble.
And now it has crashed by about 60% compared to the peak of mid-December. It's crashed 30% in last week and 10% today. And it's all the way down to zero. The fundamental value of Bitcoin is zero.
The chart guys. Technical analysis. No FUD, no FOMO. Bitcoin, Litecoin, Ethereum. All-time high.
Lift off.
Trade like a robot. Higher low, lower high. Are we in a bubble?
Bitcoin is a bubble.
The bulls versus the bears. Stick to the chart. All-time high.